Hello and welcome to another video of Coffee and Stocks. In today's video, we're going to quickly talk about 5 different restaurant chains that we should definitely look at. Some of these are surprisingly good and others are just alright for what they are. But first, before we get started, how about we get some coffee? Alright, let's get one thing straight, and that I am not a financial advisor, so don't take my word for as advice. And please don't forget to drop a like on this video as well as subscribe, obviously for the YouTube algorithm. Alright, so let's get started on the first one, shall we? First one on the list is Cheesecake Factory. One of the stocks I've really been interested in. The Cheesecake Factory has been on the decline quite a lot lately, which, here on the 6-month chart, it's been down around 39%, coming from a $40 price range per stock, obviously, to around $25 today. And Cheesecake Factory hasn't had any great news since, in the past 5 years, because here in the 5-year chart, they've been trickling down around a negative 24%. The only time they've had good numbers was right after the 2008 recession, where they were going from around $7 to around $63. That's a 710% increase in the following 10 years or so. So if any one of you got into this whole cheesecake stocks around the 2008 recession, you've had a 710% increase, which isn't bad, But since the 63% increase, they've honestly been just going down and down and down and down and down. I just want to say, I think they're back into a position in which they can really increase again to a $40 price range, but I don't think this is a good hold for a long run, personally. Like, not yet. Maybe they run into another problem, they go back to the $40 price range, and then they drop again. So I think if you want to get into it right now, you can. $25 to $40, $15 increase. So that's not bad. And if you're bold and you want to hold this for a while, that's fine. You might, get a great return in a short period of span, as well as receive their dividends, which they are currently going for 5.4%. Anyways, next on our list, we have a stock that, for me, it is ridiculously priced, but it's probably priced that way for a good reason, and that is Chipotle. Chipotle has had a really good growth in the 6-month chart, giving a 31% increase, currently going for $1,219 per share. Yes, that's right, $1,219 per share. Jeez, that's like saying Chipotle is like the Tesla of food, honestly. I mean, hopefully they do, like a stock split or something. But if we're going from the bottom, we can see that they were going for around $400 per share, and since then they've been able to come back up 162% to its current price, obviously right now. The company also announced that their partnership with Grubhub a while ago to expand its delivery footprint in the US. Revenue did fall in the second quarter earnings from 4.8% to $1.36 billion on a 9.8% comp sales decline. While digital sales tripled to $129 million, making up 60.8% of the sales mix, still wasn't that good. It didn't offset the drop in sales inside Chipotle restaurants. Obviously, because of the pandemic, no one's going in there, no one's buying, it's mostly just takeout. And I know the loss of revenue is kind of scary with the inclusion that the price of the stock is really high, but it's crazy high for a reason, and you could definitely be sure that this growth is obviously incredible, and it could definitely help you if you get in the right time at the right position, obviously. All right, so number 3 on our list, moving on to number 3, obviously. So moving on to number 3, let's talk about Texas Roadhouse. Currently down 8% to $60.50 price range. We could see in the 1-year chart that they're still in the positive 21% overall, coming from a devastating 54% decrease from obviously their $70 high all the way down to $30. From that bottom, good news is that they are more than 100% increase since the pandemic, going from the $30 to $60 that is currently priced at now. Now, this one is like, you know, Chipotle stock. In the 5 years, in the chart of 5 years, we said that their spikes and dips are considerably huge, having another 100% increase in the year 2015, 2018, and then a 35% decrease following that. You know, I don't think that's a very pretty sight to see, especially since you're trying to invest your money right. But we do see that in their all-time chart, we see that their growth has been amazing. Since 2004, they've had a 400% increase. I mean, obviously that's amazing growth if you were an investor at that time. All of their stores still remain open, which is great considering the price of their stock, obviously, right? And all of their locations have been operated in full capacity or with the takeout options depending on location. And we also have Chief Executive Officer Kent Taylor, who is the founder of Texas Roadhouse, that said in a statement, the company began reopening our dining rooms in May, which it was clear that our guests were excited to return. So then, with him saying that, this is definitely a stock to keep on your watch list, since it has a potential growth just like Chipotle, and it could increase, you know, have those 100% increases once again. And if you get it in the right time, you can definitely have amazing. Moving on to number 4 on the list, which, you know, everyone knows in the whole world knows about this stock, McDonald's. Yes, McDonald's, the world's largest chain by revenue, serving over 69 million customers daily in over 100 countries. This stock is currently going for around $209 a share, but they did get hit pretty hard with the virus with a $78 decrease in their stock. That's 38%, which is huge for such an enormous franchise. But we see here in their $5 chart that they actually had an incredible rise in price with a 117% increase from $97 to $211 right before the pandemic hit. So if you're holding on to McDonald's, you are definitely looking at very, very, very considerable returns. And I mean, as far as the restaurant goes, it doesn't get any better than McDonald's. It doesn't get any better than something established like McDonald's, nor more recognized than McDonald's. This is also including a 2% yield, dividend yield. And with a company like this, with such an amazing growth, you could already know that the dividends are amazing. For value's sake, I think that McDonald's has done its fair share to come back from its pandemic hole and increase their price tag from 52% back to $209.51 per share. So it's pretty simple. The longer you hold on to McDonald's, the higher chance it is for you to get a better return in your investment. So moving on to number 5, which is the last one on my list. Let's talk about Dominos. This one's a little crazy because you can see that in the 1-year chart, they are actually up more than 70%, which is absolutely bonkers. The question here is, did they even suffer from the pandemic? I mean, you can see here that during the months of February and March, the months that literally everyone in the US got hit, or companies got hit, you see that Domino's share price actually jumped 33% from $281 to $373. That's absolutely ridiculous. Then I guess you can consider this their hit, quote unquote, but they dropped to $286 in mid-March. Mind, they started at $281, and then they got hit, and then they dropped to $286. Like, what? But even with their drop, they ended up being $5 above their all-time high before the pandemic. This one's pretty interesting, as it does seem that Domino's is more known for their takeout. Therefore, they didn't actually suffer from any decline in money from walk-in traffic, because I don't think there's many Domino's out there where you can actually sit and eat. So I guess you could say that they actually benefited from the current pandemic. this one is definitely a stock to have in your portfolio, as this strongly shows the growth that it can give in your portfolio. Domino's does indeed have a dividend as well, not that high, but it's still yielding a 0.76%. It's not one of the best out there, but for a restaurant that really didn't get hit by the pandemic, honestly, and they also show how well it's grown in the years. And yeah, this is totally a stock that can give you tons and tons of potential returns. But tons of potential returns in growth. You saw that growth spurt. It's a crazy growth that it gives you, plus dividends. This is definitely something you should have in your portfolio. Anyways, that's the end of the video. Hopefully you guys liked it. Keep a lookout for any of these restaurants that to have in your portfolio. Don't forget to drop a like and share on this video as well. So talk to you guys soon. Till next time on Coffee and Stocks.